Hey, everybody, welcome to another episode of the Under the Hood podcast hosted by Stallion Capital. Today on the show, we have Morgen Rochard, who's a financial planner at Origin Wealth Advisors. Morgan, how you doing?
I'm doing well. Thank God. How are you, Timothy?
I am doing well. Thanks so much for asking. And we love to jump right in. And we always start with hearing a bit more about your story, how you made your foray into the financial space.
Yeah, definitely. So my practice is now almost 10 years old. It'll be 10 this summer. I started it on a whim, to be honest. I started my career in finance in 2008. I was an equity options trader. And I actually, well, if we back up before that, I was a coffee girl who was turned into an equity options trader. I got coffee for guys on the floor of the American Stock Exchange back when that still existed. And they thought enough of me to let me go take the Series 7, which was very kind of them because I knew very little. So that was really that was a leap for them for sure. And I took the Series 7 and they let me trade a small account to start. And then things got a little crazy in 2008. Some people left, some people were fired, some things were happening. And so all of a sudden I got promoted, not because I knew anything, but just because I was the right person at the right place, right time. They moved me to becoming a market maker on the floor of the Amex. So I did that for a couple of years. So I worked in on the floor of the Amex. I worked in an upstairs office. And then it just seemed like with my personality and, the way things were going for traders that it wasn't that good for my soul to be working in that kind of environment. I really do enjoy being around people and I like feeling purpose to my work. And so I decided to take a job at Merrill Lynch in wealth management. And so I worked for a large private wealth team for a couple of years. They had all sorts of complex trades and things that they were doing there too. So it was a good fit for me to move from trading there. But then I got, more used to the idea of, okay, we're doing this work for somebody rather than it just being like we're moving liquidity around for somebody out there who I don't know. And so you kind of were able to put a face to the money and a face to what you were doing, which was really nice. From there, I moved with a team to UBS, which was great for me because I got to see, okay, everything I was doing at Merrill Lynch and UBS, it didn't really matter where you did it, right? It was like, okay, if you're at one of these large wirehouses, it's all going to kind of be the same. And so that was really the impetus for me 10 years ago to go out and start my own firm was like, I liked the work that I was doing. I just didn't like where I was doing it. And I knew that going to another large firm wasn't going to make that be any different. And so, yeah, I packed up, moved home with my parents. I didn't have kids or a husband at the time, so I cut all my expenses. I moved back home. I took care of my parents' dog while I started my firm, basically, and here we are 10 years later. Thank God I'm not still doing that. And I've got I think I have 45 families now who we work with. I've got 2 employees who work for me. I have the best clients that any practice could ever hope or dream for. And we get great clients coming in all the time. So we have a nice steady flow of new people as well. And it's the dream for sure 10 years later.
There we go. That is impressive that you were able to you went really high on the New York kind of stock exchange world, and then eventually you left to find something with more meaning, more purpose, more soul. But then you kind of took a status dip, is what I'll call it. Like moving in with your parents, that is something a lot of people cannot swallow their pride to do
Yeah.
after they've been so high up in other places. So, kind of what was going through your mind there that allowed you to, kind of lower your ego, move in with your parents, and start something that was going to be, good for you for the rest of your life?
Yeah, it's a great question. I mean, I think honestly, knowing what I know about financial planning, and I know more now, obviously, than I did 10 years ago when I started this, but the most important thing to me at that time was just having a runway. And I had enough savings, right, to either start my practice for 6 months doing what I was doing, and I knew 6 months wasn't going to be enough to really take it to where I wanted it to be, or extend that runway to 2, 3, 4 years, right, by moving home, and giving myself really the time and space to be able to build the practice I wanted to build rather than just having to take any clients that were coming in. And I'll say I still took any clients that were coming in, right? Because I was starting out and it was just good to have anybody come through and want to work with me. And obviously I was able to change that over time the more clients I got, and then I was able to, thank God, move out of my parents' house after a couple of years. I got married 3 years into my practice, and that was kind of one of the other things. Just had a very long-term mindset of, okay, like, I knew, like, my then boyfriend, now husband, and I knew we were gonna get married. I knew that we were gonna have a family, and I wanted to make sure that my business was kinda up and running before we had our first kid. That way, I didn't have to focus so much on, like, the marketing and, pounding the pavement and getting people in. I wanted to make sure that, okay, things were, like, humming well enough that when my son got here I thought at the time it would be easier. It was not. It's not easy to have a baby and a 3-year-old business. So, like, all my planning didn't exactly go as planned, for lack of a better word. But, I did my best. And I think that it's a good lesson really for business owners in general that, like, sometimes you really do just have to check your ego and look at the numbers and do what we tell clients to do all the time, right? Which is, we have clients look at the numbers and we present them with options, and then they can make the best decision that they can. And sometimes, clients do make the best decision and sometimes they don't. And in my situation, it felt like the right thing to do wasn't necessarily the thing that was going to, put a cape on my back and make me look great in public, right? It was just it was the right thing to do though for me at the time.
Yeah, yeah, no, absolutely. I love that you were able to kind of make that call and take the advice that you're giving clients today, and it just speaks a lot to your character. And I think when you're getting into the business, or when you're a client looking at who you want as an advisor, that character piece is extremely important. So I just wanted to highlight that because I admire it, and I don't think a lot of people would be willing to do it. So kudos to you. Um, well, cool. I think we understand a little bit about your story from kind of into the finance space, from coffee girl to independent RIA, right? I do want to hear just briefly, just like a minute or minute and a half, about what it was like on the floor of the New York Stock Exchange. Like, when you're trading, are you doing primarily technical stuff? Is it technical and fundamental? Is it like, whose money are you using? What is the like? Just give me a 1 minute
Yeah,
diagnosis of
sure.
it.
So it depends on who you work for. I worked for a small prop trading firm. And so there were a few investors basically in that firm whose money we use to make more money. There are other firms, right, that do this where they provide liquidity as a service. And so, like, the money that they're using might be like it also would be firm money, right? But maybe it's a much larger pool of capital and not so few investors and so forth. The energy definitely changed over time. When I first got there, it was very high energy, and that's because my job, I got 3 days after Bear Stearns went out of business, and I graduated college in 2008 in May, and so they had me show up in June of 2008, but I was hired basically like right around when Bear Stearns happened. And so I remember even calling, being like, "Do I still have a job?" Like, and they're like, "Oh yeah, no, like things are great here." And so I think the difference between what was going on in these market making firms in 2008 versus, what the rest of the financial services were experiencing was that, like, they thrive on the volatility. And so the more volatility there is, especially because they tend to be buyers of options rather than sellers of options, that just means the value of their options go up, right, when volatility is higher. And so it actually makes it easier to make a market, especially when things are super volatile. The spreads tend to get a little bit wider. Things are very, very tight now. It's one of the reasons why you have to basically be a high frequency trader, and be in sort of an upstairs office where you're just using a computer at this point to do this. The spreads were still wide enough where you could basically do math in your head on the fly, and make a market. And people would either take it or leave it, I mean, it kind of just depended on the moment. There was a lot of yelling. I'm not very good at that, and I'm tend to be a little more quiet. So it definitely took a lot for me to just sort of scream out in a crowd, a market. I had to practice a lot in front of the mirror. And I'm glad I don't have to do that anymore, to be honest. I'm much more like even keeled and laid back, and like, I'm not as good under pressure as maybe the average person. And so it really wasn't a good fit for my personality, but somehow with the help of God, I was able to do what I had to do in that 2-year period of time. So, um, yeah. It's definitely not like that there now. Now it's basically the set of CNBC, and there's really not a whole lot of like that old school testosterone, for lack of a better word, like happening down there. Yeah.
I got you. I got you. Very cool. Well, we know a little bit more about you, but where do you go to kind of stay up to date with current market insights, just financial strategies for your clients when you're trying to give them the best advice that you can?
Yeah, so I mean, we tend to be really kind of low key and passive around here. I mean, definitely I keep up with news and I keep up with what's going on and we keep up with like financial products, especially because clients ask us about certain things or certain investments and so forth. And we try to keep up with market trends of what's happening. But really, when somebody becomes a client at Origin Wealth Advisors, they're here because they are looking to use this money over a long period of time. And if that money is something that we don't need for 5, 10, 15, 20 years, then we're not really all that concerned about what's going on in the short term. We're looking at making a really good long-term asset allocation that makes sense given the client's needs, risk tolerance, time horizon, unique situation, and so forth. And so for a lot of our clients, what that looks like is that they have maybe cash or very short-term bonds for like those immediate needs that they have over the next 1 to 5 years. And then the rest of their money is invested in a way that that can really grow and be something that they'll have for in the future. And so because of that, like I wouldn't say that we're not all that active, right? Like we don't we don't go out of our way to like find out, "Oh, why is the market down today?" Or like why is the market down what it's done in the last 3 months? It's like I don't care so much about that as much as I care about, okay, what's happening over the next 10 years? What's happening over the next 20 years? That kind of a thing. And obviously it's hard to know and we do use projections and so forth. But we found that to be really important for clients. And the other thing that we found really important for clients is to distinguish between investing and savings. And so that's not something that advisors really are comfortable doing. It's not really something that anybody's all that comfortable doing because we have now looked at savings as investment for a very long period of time. And this is because, right, there's by design in our society, there's inflation. It's one of the reasons why people like me even have a job is because people can't just immediately take their savings and figure out exactly what they're supposed to do with it in a quick period of time so that they are not impacted by inflation. And so, by design, like at best, we are being diluted out of our money 2% per year, right? At worst, right? We saw this a couple of years ago is, 8, 9, 10, 11%. And so, like we rely obviously a lot on some folks that are in the central banks to make sure that they make the right decisions, but they're human just like us. They're not God. They don't know what the repercussions will be of their specific decisions. And so, it's important for clients to distinguish between, okay, how's this going to impact my investment versus how's this going to impact my savings? And so we look at that quite a bit in our practice to make sure that people have appropriate savings versus appropriate investment.
Okay. And so is there a golden ratio there, or do you have to fit it to the client? Is there a golden ratio you start at and then adjust based on the client? Or how do you go about determining what's good for savings and then what's good? Before you answer that question, I have a pre question to that question.
Yeah.
Is the money that's sitting in cash or money market and short term bonds, is that considered their savings portion, or is their savings portion something different?
That's a fantastic question. So, I consider savings, at least long-term savings, to be Bitcoin. For my clients, long-term savings is Bitcoin, and short-term savings is yes, going to be just fiat cash and short-term bonds. Short-term bonds we consider anything 2 years and under to be short-term bond. And so savings though, right, is not something you can't save in fiat over a long period of time. Like we were saying, right, if at best you're being diluted by 2%, right, then your money is going to go down by 2% every single year, right? So in year one, you have 100K. The next year, you only have $98,000 worth of purchasing power, right, and so forth until now unless you're replenishing that account, you don't actually keep up with inflation. And so what people say is like, "Oh, okay, well I put it in a high yield savings account and then I keep up with inflation." And it's like, "Okay, well your high yield savings account is delivering, 4 or 4.5% right now. Is inflation 4 or 4.5%? I don't know." What we've found in our practice is that inflation actually tends to be very particular and individual. And so one person might only have, let's say, 2 or 3% inflation, and another person, depending on what goods and services they're buying, has 30% inflation, right? And so if they're keeping long-term savings, quote unquote, in fiat, and their inflation rate is 30% because of the basket of goods that they're buying, then it's untenable that you would keep those assets in short-term savings as long-term savings. And so, to get back to your question, though, it is very client dependent on how much somebody should have in savings versus investment. What we've found in our practice, and we tend to deal with people who have been involved in Bitcoin for a long period of time. Long period of time to me is 3+ years. Who understand the technology, who are prepared to hold this asset for 10 plus years because they don't actually need that money. What we found for those people is that having somewhere between 30 and 50% of their assets in something like this as actual savings rather than it actually being invested has become something that is appropriate for people. When people hear this, their minds are blown. They're like,
Yeah,
how
my
could you
mind was just blown.
possibly put somebody 30 to 50% in something like Bitcoin? Are you insane? Like, what is wrong with you? And
I was like,
and
am I going to be able to post this?
yeah. And so obviously for the average person, right, that's not going to make sense. For somebody who's like, I heard about Bitcoin on, CNBC or whatever, and I have no idea what it is. I haven't spent any time like researching or whatever, right? That's not going to be appropriate. And so for that person, yeah, like getting your toes wet with something like 1% or 2%, right, is going to make sense. For somebody who's been around it for a long period of time and who understands the difference between savings and investment, they actually don't they start to learn that investment is something that you do when it makes sense rather than something that you do simply because I have to beat inflation. And so it's just a shift in your mindset between, okay, I used to take my fiat and invest it because if I don't buy the S&P 500, then my savings is going to be obliterated. And so I have to do something with this money and I don't know what to do. So I buy this index fund, right? Like we see a lot of that happening now. And for the average person, the S&P 500 has actually become their savings account, which is totally inappropriate. They're invested in 500 different companies around the country. Like they're very dependent on, the beta in the market and systematic risk of companies. Like there's a lot of risks that are associated with investing. And people can say, yeah, there's a lot of risk associated with owning something like Bitcoin. And I agree, there's risks, right? It's a highly volatile asset, but it's actually the least uncertain of the monies because this monetary policy is stable. And so, like once you sort of can wrap your head around, okay, the monetary policy of this doesn't change. It's quite fungible, right? It's divisible. You can use it for like it's the same way that you can do accounting with fiat. It's just that you can use it with Bitcoin. You can send something as small as a single satoshi, which is one hundred thousandth of a Bitcoin, right? You can it doesn't have censorship. It has I'm sorry, it has censorship resistance to it. So like a government can't come in and just seize your Bitcoin, right? They have to actually get a warrant and come to your house, depending on how you're storing it, and have actual cause for taking your money rather than, okay, I just freeze your bank account because you're located in Russia and maybe you're involved in what's going on abroad, right? Like there's a lot of that going on. Or like if we think back to the truckers incident that happened in Canada, right? All of a sudden they started freezing and seizing assets of people. And so while we think in America, okay, we don't necessarily need something like this, we're seeing globally that we actually do need something like this, where people can't just come in and take assets where you don't have that trusted third party. And so just understanding what it is and what it can do for your savings rather than for your investment, right? It removes a lot of the uncertainty that we have around what is going to be with my fiat, right? And so in those instances, yes, then it does make sense to be somewhere between 30 and 50%. In any other instance, though, right, then if you're just starting out, then I would never ever say that any kind of allocation anywhere near that would make sense for the average person.
Yeah, yeah, no, that makes a lot of sense. You just dropped a lot on me. So give me a second. I really like the Bitcoin conversation, and I have one question that I think I neglected to ask Keith. I think you're familiar with Keith Laska.
Yeah, learnbitcoin.io.
Uh-huh. Yeah,
Yeah.
he came on the show and we had a good conversation about it. But with Bitcoin, so maybe this is me being naive and maybe everybody in the audience knows this. So be it. With the American dollar, right? It's not really backed by anything. It's fiat, like you said. And so it just has power because, you know, people use it and we believe in it and there's anyway. But
Yeah.
with Bitcoin, doesn't it need that same kind of mass buy-in to continue to increase in value? And what are the if that is the case, If it's not the case, please tell me. If it is the case, what are kind of the risks associated with it not having mass buy-in, or government stepping in to kind of try to stop that mass buy-in so their currency doesn't get
Mhm.
overturned or whatever?
Yeah, for sure. So I think to see the kinds of returns that we've seen in the past from Bitcoin, right? If you're expecting to have, 1,000% year over year returns from this asset, then yeah, you need to see like intense periods of mass adoption to happen in order for that kind of return profile to continue. Um, we are still quite early though on like how many people have adopted this as a currency, like what its market cap is relative to like other, standard asset classes. And so I think from that perspective, there probably is still a lot of room and there probably still will be lots of waves of adoption. And we tend to do this in general, right? We act in herds. And so like we all kind of come in at the same time. And then, some people are gonna stay around and other people are gonna say, yeah, maybe this isn't really for me yet, right? And then they leave. And then maybe they come back later. And we've seen that in other cycles where people kind of herd in and they're not that they don't know really what they're getting themselves into. And so they start selling when things start going down, right? And then they regret it, so then they get they get back in maybe when it starts going up again, right? Then they regret it again. It's like there are cycles that are happening for sure. For it to have value though, it's twofold. So on the one hand, it gets value from like there are miners basically who do something called proof of work, and proof of work it's costly. You need to have ASIC miners. You need to use electricity. You need to have somewhere to store these miners and so forth. So there's a cost associated to producing Bitcoin, right? Because right now we're still in a time where Bitcoin is being produced. There's a reward basically for mining Bitcoin that the miners get, and then they also get a transaction fee for adding transactions to the chain. And so there's an inflation rate right now until the last Bitcoin is mined in 2140. And so there's proof of basically like the miners are doing proof of work in order to get that mining reward and then to also get that transaction fee. And so they're expending energy to do it. If it were not worth anything, right? If Bitcoin were not worth any value, then it wouldn't make any sense for these people to expend all of this capital and to use this electricity in order to produce this thing. So in some ways it's like yes, it doesn't have any value if people don't want to use it, right? And I hear you 100% on that, but it also doesn't have any value if people aren't willing to mine it, because then they're literally not willing to do the work in order to receive this as currency. And what we've seen obviously is the opposite, right? There are publicly traded companies that are doing this because it's worth so much to them that they're going to expend massive amounts of capital. They're going to take up large places of real estate. They're going to it's like get into electricity contracts over mining this. And so I would say, if anything, there's more value there than fiat, right? In fiat, right, there's just a printer, and they use the printer when they want to, and they don't use the printer when they think that they shouldn't use the printer, right? And so it takes actually very little, right? It's the cost of paper and printing. There's a lot less, and obviously, the electricity associated with doing it, but there's a lot less expenditure actually to do that than there is to do mining in Bitcoin. And then I think you had another. Sorry, I think you had a third part to that question, but I forgot it.
I'm pretty sure it was what's to stop. So I guess I'll pre-context the third part of that question again. Um, I was going to agree with you that fiat has less value, like the mining versus the printing, and then I'm like the real value behind the U.S. dollar is like, as sad as this is to say, the U.S. military is kind of what it seems to be sometimes. And I was just going to preface the third part of that question because the third part was what's to stop countries like the US from coming in and trying to get their hands on Bitcoin and really control the supply of it so that it ends up being like another US dollar under their control.
Yeah, I think it's just easier said than done, right? So, like, people tried to change the code. For instance, there is, I think it's a Greenpeace, or like part of Greenpeace, where they got some money to try to change the code, and they've tried to change it from proof of work to proof of stake, whereby they would expend less energy, and thereby, the claim is that it would save the environment. And we can get into an entirely different conversation about whether or not people have the right to use electricity and so forth. Obviously, I believe that they they do, and that the world is a better place if all people use electricity in the way that helps them make this world a better place. And so, but basically, the government, they could try to come in and change the code, but they're going to have trouble doing that. There are node operators basically around the globe, not just in the United States, who would just simply reject that change to the code, and they wouldn't adopt it, and they wouldn't basically verify transactions that were happening on a fork, which would be what would happen. The code would actually have to fork, and we have forked in the past, right? There's been Bitcoin Cash, and there's been Bitcoin Satoshi's Vision, and I think there's probably been some other smaller ones as well. But basically, the code has forked, and then people didn't go to that fork, right? They kept being on Bitcoin. So if the government wanted to cause a fork, they can have US dollar Bitcoin or whatever, and they can fork, and then people can go if they want to. But what we've seen in the past is that people don't go because they don't want that. And so I think it's going to be really difficult from that standpoint for them to actually control it. I think the best way that they can get involved would be to own some, to actually have a treasury, in addition to their treasury of US dollars and T bills and everything else that they have in bonds, that they have a treasury of Bitcoin. If they did that right, they don't control the asset, but they have some of the asset. And when they have some of the asset, right, they have some skin in the game, and they can use that asset as they see fit. The problem is that we don't live in a world where we have a balanced budget, where the government is in any position to even have any kind of long-term savings. So if they were going to do something like that, they would have to print US dollars to go buy something like Bitcoin, or at least not auction off the Bitcoin that they already have, that they've taken through seizures and so forth. They've decided to be auctioning off that Bitcoin, though. So they're going down the route of not having Bitcoin rather than having Bitcoin. And so I don't see a way that the government at this point could get involved in a way that they can shut it down. The worst thing that they can do would be that they can stop people's fiat on and off ramps. So they can basically make it illegal to use something like Coinbase or any of these other exchange providers. They can make it illegal especially because they do have control over people's bank accounts, where as soon as a bank or institution sees that somebody, tried to do a transaction at a Coinbase or something like that, where they just say, okay, your banking rights are revoked, and you can't bank anymore if you do that. And so they could do things like that. I think it would be very, very un-American and very unpalatable if they went door to door and started seizing people's Bitcoin. It's one of the reasons why we do tell clients, okay, if you're going to have these positions, like, do not keep them on exchanges, don't have custodians of any kind. Like, you need to hold it in a hardware wallet or some other form of self custody where you have the asset, because otherwise, like, they can freeze an account, right? They can go to your Coinbase account and just take it if they wanted to. They can't do that. They can't go door to door and do that without either passing some sort of law whereby they go and collect everybody's Bitcoin, which I think would be hard to do, or actually getting warrants for people and starting to break down doors and go take people's Bitcoin. So it's very un-American and seems very unlikely that that would happen. I think that if they had tried to get involved 10 years ago, when, they kind of laughed at this thing and said, Bitcoin's kind of dumb. Who cares about this? No one's ever going to use this stupid currency. I think if they had gotten involved then, they probably could have shut it down. We're kind of at a point now where there are so many companies involved. There are publicly traded companies in the US that employ a lot of people, not just in Bitcoin, but in other assets too. There's a whole globe that's also involved. It's not just the US. So even if they shut it down here, it's still going to go on globally. There are countries now that are accepting as legal tender. I mean, we're not really in a place where the US can just say no more. They really just need to figure out a way to operate side by side with it.
Yeah. Yeah, no, absolutely. And I think it's a good point that, they could always start physically going to people's homes and seizing it, but that would be very un-American. And it's the type of thing where it's like, it just kind of digs the hole deeper for the story of fiat currency, because if Bitcoin is offering that freedom from that kind of tyranny and that control over the bank account, and you start knocking on people's doors to try to seize their Bitcoin, that will not leave happy campers.
Oh,
um,
definitely, yeah, and if anything, I mean, it'll start creating a black market for this because people are gonna want it even more, and, people are already, I think, a little fed up. I mean, the average client of mine who wasn't, somebody who came in as a Bitcoiner, but the average client who has seen what's gone on, with inflation, who has seen the government overreach here or there, is starting to just feel like, you know what, maybe I do just want a little of this to opt out, right? I mean, we have some clients obviously who are in that 30 to 50% range, but we have other clients who were with me before we started having Bitcoin clients, and who, they have reasonable sized positions, 5, 10%, and they want to have these 5 to 10% positions because they don't necessarily like what's going on. And they feel like the world is on fire, and it's not like they can't just blow it out. And I don't actually feel like we're in a situation where we can just blow it out. Like, I feel like maybe, maybe 10 years ago, we probably could have gotten the country's debt under control, but instead, that's not what we did, right? The country decided to keep printing every time that there was some sort of emergency, right? And we can argue about whether or not these things were emergencies, but it doesn't matter because the government thought it was enough of an emergency to print. And so what we're seeing now is that that's the only tool in their tool belt. Whenever there's a problem, they print money. And whenever they can't pay for something, they print money. And people are tired of that. The average person just wants to go, work, be with their family, be part of their community, maybe go to church or synagogue or something, right? They don't want to worry about like their inflation rate, and they don't want to have to worry about like what are central bankers doing, and they don't want to worry about whether or not their account gets frozen because they happen to be some sort of victim that's accused in something, right? Most people are just trying to do the right thing. They're just trying to put food on the table for their family. They're just trying to have enough money for the future. They maybe have some specific goals that they want to accomplish, like sending kids to school or having a legacy or charitable goals, right? Like these are just what average people want to do, and they don't want to have to worry about something that's so far beyond their control. Where we have no control over what the government is doing to our money. We just have none. And so if we're looking at it from that perspective, then yeah, it makes sense to like opt out in some way. And whether that's, a 1% position or a 50% position, right, is obviously going to depend on the person and how much they want to opt out and how much they understand this and, what they want to do versus of savings versus investment.
Yeah. Yeah. No, absolutely. And I want to go back to that kind of long-term savings versus investment. Um, because a lot of people would call Bitcoin an investment, or at least that's how I've thought about it up until literally the past 30 minutes. So, just talk to us a little bit about the difference between, because you mentioned why you should invest earlier. You said you should have a reason, but I do want to parse that out a little bit more. What are the nuances around, okay, what is that reason? And then long-term savings with Bitcoin, 1,000% year over year is what it's done in the past. It's like, that seems like an
That seems
investment to
like an
me.
investment.
So talk to me
Yeah.
about it.
Yeah, yeah. So an investment is traditionally a vehicle by which you give a company, right, somebody who's going to take your money and they're going to use that money to maybe broaden their company in some capacity, invest in their own company, right, to make sure that they can provide products and services for people, and thereby gain a return on that investment, right, and then give you a portion of that. And so you can do that in the form of a bond, right, where you loan a company money and then they pay you interest over time and then they pay you back that the value that you loan them, or you could do that through equity, where you just give them the money, right, and then you own a piece of the company. And so when you're investing in a company, and I think that this is often sanitized, right? Because now we invest in index funds or we invest in a mutual fund that owns lots of different things. And we're diversified. So we don't really think about the fact that we're still literally taking that money and giving it to a company and having them use that capital to invest in that company itself, to create goods and services for people, to pay employees, right? To literally run their business. And then you either get interest and return of principal at some point or a portion of that company. And so when you're going to invest in a company, right, there needs to be an actual opportunity, right? We don't just invest because there's inflation. We invest because we think that when we give that company money, that they are going to do good things with it and give us a return on that investment. And so again, this has been completely sanitized because we get money and we need to invest it as quickly as possible. And what's the best way to invest money as quickly as possible? Invest it in 13,000 companies around the globe, right? There's even these global ETFs now where you could literally buy every company out there. Is that a good use of people's capital, right? Should every company around the globe be getting money simply because there's inflation and people need to put their money to work? Like, I think that doesn't actually make sense. It makes sense in this crazy fiat world that we live in, where yes, we have to take money as quickly as possible and implement it, otherwise we're going to be diluted. But it doesn't make sense if you actually think about what an investment is, which is companies that are good and that are providing actual value should receive that money, and people should be taking time to evaluate what those companies are, and so that they will get an actual return on their investment. And so when I think of savings, right, savings is literally you hold money and you hold money until you're ready to either spend that money or make an investment, or you just hold the money because there's nothing to spend it on and there's nothing to invest it in, right? And so with Bitcoin's not an investment; it's actual money. It doesn't throw off a cash flow. We think of it as an investment because we don't it's not issued by a government, right? The way that we typically see money, because we hadn't seen, anything like this before. But it's not actually that. It's literally a money with a monetary policy that's set and stable and that you can look at over time and you can evaluate the code. There are people that are working on the code day and night to make sure that that this money continues and is a going concern in the future, to use a like company term. But it's not actually an investment, right? You don't give money to Bitcoin company and get a return on it, right? You put money into Bitcoin and you hold it until you're either ready to spend it or invest it.
Mm. Man, that made a lot of sense. I do appreciate you diving into that. I was curious what the answer was going to be, and that made perfect sense to me. Um, so I am curious, when all the Bitcoin um, have like been disseminated into the Bitcoin market, or they've all been mined, right?
Mhm.
Will the price of Bitcoin still be driven upwards at like a predictable rate? Or because you said there was some built-in inflation because people are mining, and so does it stabilize after it's all out there? Dive into that a little bit for
Yeah,
me.
I think that that's a good question, and I don't have, I mean, I hope I'm around in 2140, to see what will actually happen. So, this may not age well if somebody is listening to this in 2150 and they're like, "You're an idiot. You had no idea." Um, so I have the humility to know, at least I probably don't know, but I do think that that because I think it honestly depends on how adoption goes. I think that if there is strong adoption throughout the years, then what will happen is that at some point, maybe that volatility will not be as strong. But that said, it's hard to know, right? It could just be that instead of having volatility in our purchasing power, like we see from day to day, that we actually have volatility in the money itself. And so that would mean that prices would fluctuate. So, like when you go to the store, let's say, I don't know, you want to buy coffee and it's 500 sats or something like that. Maybe instead of it always being 500 sats when you roll up, it's like, today it's 450 and tomorrow it's 650 and, and so forth. And so you see some volatility in like actually paying for goods and services. So I don't really know. I don't actually have a good answer for that. I do think though that if there are these huge waves of adoption, right, and that all of a sudden, we go from maybe a few million people using this to, a billion people using this, right? That returns shouldn't look like what they have in the past, and that it should stabilize in some way. That said, though, at some point there aren't going to be more coins added to the ledger, right? Only transactions. In which case, now it's a deflationary monetary policy instead of an inflationary one. And so, at some point when we hit the end of the curve and there's only the 21 million Bitcoin, right? There's only a fixed pie basically at that point. And so, having deflationary money tends to scare people because they think of deflation and they think of like a 2008 type scenario. But instead, what they should be thinking is like, okay, instead of over time things costing more in the future, over time things actually will cost less in the future because my money will be worth more. And that might actually be more palatable to people in the future because they might like saying that, oh, I saved some money and now I predictably am able to spend more than I actually could when I was in my working years. And so that's kind of how where I see it going. But again, like obviously, I could be totally off base here and not know because I will not be alive, most likely, unless I live to be 160. So
Yeah. Yeah, yeah, I gotcha. I gotcha. That's really interesting. And so, I had one more question, and it is now blanking on me. Oh, it wasn't a question, it was more of an observation. I realized that I was only thinking of Bitcoin in terms of the value of it in US dollars. That's why it was so confusing to me. And then when you gave that example, you said some coffee costs 500 sats or something like that. It
yeah.
just changed the whole perspective I had
Yeah,
there.
yeah, it's totally different. So one of the things that Bitcoiners like to say is that if it all goes right, you don't ever go back to fiat. And so one of the reasons why people take such large positions is because of exactly that, right? If you don't need money for a long period of time, and in the future you think that people are just going to use Bitcoin, and that there isn't going to be capital gains potentially because people are just going to be using Bitcoin. So they've already produced bills. They haven't passed yet, but I imagine this is just the first of many. Where there was a bipartisan bill that came out that a de minimis spending of $600. If you spent $600 worth of Bitcoin or less, you didn't have to pay capital gains taxes on it. And so if they're already coming out with this stuff now, right? If Bitcoin is more widely used, let's say in 10, 15, 20 years, right? At some point, obviously, unless you're spending a lot of money on like a house or, something large where, if we're still using fiat and so forth, people would be paying capital gains. But there might be a period of time where you are just able to go to the store and buy a coffee and you only think about it in terms of Bitcoin price rather than dollar price because that's what you're using.
Yeah, that's really interesting. That's super interesting. Well, cool, Morgan. Usually we jump into some more current market insights and some alts, but I think we did such a deep dive into Bitcoin that I'm feeling good. Is there anything else that you want to cover that you feel like we have left out of this show?
Yeah, I would say the other thing is that so people often say about Bitcoin, "Oh, well, it's never going to work out because it's too complicated. People will not be able to use it. People don't understand it." And so the example I like to give for this is twofold. The first thing is you don't know everything about your car, right? But you still drive it. And so you know how to turn the key in the ignition, right? If you still use one of those or hit the press to start button, right? You know what gas to put in your car. Otherwise, if you put diesel in it, right, it's not going to go. There's certain things that we know about our cars, or like, maybe we could refill the windshield wiper fluid. I'm talking for myself because I know so little about cars. So like, I'm talking about the three things that I know about a car is like, take the vacuum cleaner out when your kids spill food on the floor, right? Like I could do that. Um, but I don't know how an engine works. I wish I did. Maybe in my next life, when I have extra time, I will learn how to fix an engine or to like, I can change a tire, but like I can't patch a tire, right? Like I don't know anything about that kind of stuff. So, but I can still drive my car and I can still get where I need to go and I can still take my kids to school and do all the things that I have to do, despite me knowing, I don't know 90% of things that you're supposed to know about a car, right? And so people often say, okay, if you don't know every single little thing about Bitcoin, then, people aren't going to use it. And that's simply not true. What people need to know about Bitcoin is like, okay, can you take out your phone and scan a QR code? It's like most people have been they're doing that with menus at a restaurant, right? Like for much less important things, they're scanning QR codes. Like, okay, we can scan QR codes. Can you copy paste something on your laptop to send money, right? Can you like type in 15 and copy and paste an address and then send money there, right? Like these are sort of simple things that people can actually do. Can you keep money on your phone? Yeah, people use Venmo all the time, right? Like you don't necessarily have money stored in the phone, right? But your bank account is linked up to your phone and you can use it. You use Apple Pay, right? There are so many ways people use their phones these days to actually do a transaction. And so, if anything, like all of these technologies have actually paved the way for people to just have a little wallet on their phone where instead of having your wallet in your back pocket, you keep, a couple $100 on your phone in Sats terms, and then you can go and spend. And then everything else, right? You wouldn't keep all of your Bitcoin on your phone, just like you wouldn't keep all of the money that you have, right, in your wallet. You don't like, take everything out of your bank and then stuff your wallet as full as you can and walk around with like the biggest, fattest wallet you've ever seen, right? Nobody does that. And so I just think that there's sort of basic things that people don't necessarily understand. Like you don't have to know so much about Bitcoin to be able to use it. You just have to know enough to sort of get going. And I think that the more people actually practice and use the technology that's out there, the easier it is going to be for people to adopt it.
Yeah, yeah, I love that. I think another thing worth noting is that people definitely don't know everything about the American dollar, how banks work, how the central bank works. Like people definitely don't know.
Yeah, yeah,
So,
yeah.
and we use that one just fine. So, yeah, I
Yeah,
think
I mean, there's that too. And then the other thing I would say is so I have an 86-year-old client who's a hardcore Bitcoiner. Like he is not technologically competent at all. He wouldn't even be embarrassed for me getting on here telling you this. Like he has had trouble with Zoom, but he knows how to use Bitcoin. And so I'm just like I think that when the interest is there and when it's important, we figure it out, right? Like I've figured out how to write a check when it's been important, right? I don't write checks that often. Like writing a check is weird. You have to write the name, the date, you have to put the numbers in, you have to actually write out the numbers. Like this is all crazy. And then sign it and that's actually money. Like that's nuts. Like why would copying and pasting a QR code or a just an address be weird to people, right? The more we use the more we use it, the more we do things like that, the easier it is. And the same thing with wire transfers. Doing a wire is incredibly hard. If you don't do wires all the time, it's very confusing to look at wiring instructions and know what to do, but people figure it out, right? Because if they have to send a wire to buy a house or do whatever it is, they figure out how to do it. And so it's the same thing with Bitcoin. And I would say it's even easier with Bitcoin, right? Because you can move very large amounts of money in a very short period of time in the comfort of your own home, sitting in your bed, like at, 1 o'clock in the morning, you can move $1 million and you don't even need to leave your house. You could never, ever do that in the fiat system. You would be flagged like you wouldn't even believe. If you go to the bank and you tell them that you want to take $10,000 in cash out of your own account, you are basically, they think you're a criminal and they start asking you all sorts of questions, right? I just experienced this. I was trying to pay for my son's school and like I had to do it through Zelle. And so I go to pay for my son's school and they block the transaction because I'd never done a transaction before. This is for less than $2,000, mind you. This is not like a big transaction here. And so I tried to do it again. They shut my Chase account down. Okay. So now I can't log in because they think there's fraud on my account. So I had to call them. So I call and like, I've got screaming kids, this is not what I want to be doing on Friday afternoon. I'm like preparing for Shabbat. Like, this is not like my ideal Friday afternoon. I'm on the phone with them. They start asking me like literally she had 30 questions she wanted to ask me about this $2,000 transaction. I'm like, you know what? I'm just going to mail a check. Like, it's fine. Just cancel it, turn my access on, like back on. I'll mail them a check. Please leave me alone. Like, it's like how much overreaching. And she's like, this is for your own protection. I'm like, literally, lady, if I told you I wanted to Zelle a Nigerian prince money and I'm on the phone with you right now confirming that I want to send it to Nigeria, like you should send it, It's me, the client, telling you to send it. And she's like, absolutely not. We can't. We can't do that. We have to protect you from yourself. And so it's like, okay, we have these protections in place so that we don't, accidentally lose our money or whatever, but that we are giving up a lot in doing that. And I think that people often forget that because we're so used to living in this world where like we're under scrutiny all the time, every day. Like all of our conversations are being listened to, right? Like, I mean, maybe I have my tinfoil hat on here, but this is all true stuff, right? I'm not making anything up here. Like every single one of your banking transactions is something that somebody could audit at any given period of time, right? We already live with a CBDC. People are worried about a CBDC. We already have it. The US dollar is that. It's not like on a blockchain or anything, but does it matter? I mean, is the government's blockchain going to be any different than what it is today? So I feel like, sometimes I sound a little crazy and sometimes I sound like I've got my hat on, but these are all truths that people can't dispute unless they're just going to deny reality right now and like the world that we live in.
Yeah. Yeah. That's very fair. That's very fair. Well, awesome. Morgan, I appreciate you coming on and giving me the what for about Bitcoin. Man, I really did. I'd say my biggest takeaway, and I always love when I love the one with Keith and I love this one with you, because the fact that I was connecting Bitcoin to the US dollar and like that, I couldn't get that out of my head. I appreciate you for shifting my perspective a little bit there.
Yeah,
Um,
definitely. I get asked all the time, so what's your Bitcoin price target? And the answer is there is no price target, right? Because like I can tell you $1 trillion or whatever, but it doesn't matter, right? If the US dollar is not worth very much, then $1 trillion is meaningless. If the US dollar is worth a lot, right? Obviously that would be an insane price target. And so the future is that these are separated. And so it's actually my hope for people because I think that would give people hope. If they didn't have to worry so much about their money, then they can go back to doing really useful and meaningful things with their lives.
yeah. Yeah. No, absolutely. Well, Morgan, thanks so much for coming on the show. We
Thanks
appreciate
for
you.
having me.
Of course. And if you guys are listening to this and you loved what Morgan had to say, we'll put the ways to contact her down in the show notes, but let's also say it for them here. Morgan, what's the best way to contact you?
Yeah, you can find me on Twitter. I'm at Morgan with an E Rochard. I have two financial practices. My first one is Origin Wealth Advisors. It's originwa.com. And then I have a consulting practice called moneyowners.com where I either help advisors implement Bitcoin in their practice or I just answer Bitcoin questions.
Sounds good. I think I saw you on your LinkedIn. It was 450 an hour. So I think we just got $450 worth of content in this podcast. So we appreciate your time. Thank you so much. And yeah, for you guys watching, we will see everyone on the next one.